Welcome to Crypto for Seniors, where technology meets wisdom and curiosity evolves into knowledge. Today's video, we put a stop to those who say crypto has no value. It is nothing more than smoke and mirrors. But first, nothing contained in this video is considered financial advice. I am not a licensed investment consultant. Please never spend $1 until you have totally familiar with the crypto project and you have done your own research. Okay, let's get started with our video. Ever wondered why many people still think cryptocurrency is just monopoly money? It's a common misconception, and not entirely without reason. After all, unlike the tangible physical coins and notes that we're all so used to, cryptocurrencies exist only in the digital realm. They're intangible, invisible, and to many, somewhat mystifying. But here's the thing. Both forms of currency, whether it's a Bitcoin or a dollar bill, have value because we, as a society, believe in them and accept them as a medium of exchange. Yes, you heard that right. The value of money, in whatever form, is largely a product of collective belief. So, let's take a closer look at the traditional form of money, also known as fiat currency. Examples of fiat currency include the dollar, the euro, or the yen. Now, these aren't backed by physical commodities like gold or silver. No, you can't walk into a bank and ask to exchange your $20 bill for an equivalent amount of gold. That's a relic of the past. Instead, these currencies are backed by the trust and confidence in the government that issues them. Governments declare their respective currencies to be legal tender, which means they are recognized by the law as a valid form of payment. But what is it that really gives these slips of paper or metal coins their worth? It's not the paper or the metal they're made of, surely. No, it's our collective faith in the system, that societal agreement that we'll accept these as a representation of value. Now, turning to cryptocurrencies, they might not have the physical presence or the government backing that fiat currencies do, but they too derive their value from a shared belief. In this case, a belief in the technology, the security, and the decentralized system that underpins them. So, if we think about it, isn't fiat currency also a kind of belief system? In the end, whether it's fiat or crypto, our faith in the system is what gives money its real value. And that's something to ponder on as we delve deeper into the world of currencies, both digital and physical. Now that we've shaken the foundations a bit, let's delve into the differences between crypto and fiat currencies. Firstly, fiat currency is centralized. It is issued and regulated by a central authority, typically a government or central bank. On the other hand, cryptocurrencies are decentralized. They aren't controlled by any single entity. The power lies in the hands of the people who use and mine them, creating a democratic financial system. Secondly, the digital nature of cryptocurrencies sets them apart. While you can have a digital version of fiat currency in your bank account, cryptocurrencies exist only in the digital realm. There's no physical equivalent of a Bitcoin or Ethereum coin. This digital nature makes cryptocurrencies more accessible, especially to those in areas with limited banking infrastructure. Next, let's talk about supply control. The supply of a fiat currency can be increased or decreased based on the decisions of central banks. If the economy is in a slump, they might print more money, but this can lead to inflation and decrease the value of the money you hold. Cryptocurrencies, however, have a maximum limit. For instance, there will only ever be 21 million Bitcoins. This scarcity can drive up the value of cryptocurrencies. Then we have transaction speed and privacy. Traditional banking systems can take days to process international transactions. But with cryptocurrencies, you can send money around the world in minutes. Plus, while your bank account transactions can be tracked with cryptocurrencies, it's possible to remain anonymous. So how do these differences influence the value and use of these currencies? Well, the decentralization and digital nature of cryptocurrencies can make them more accessible and democratic. Their limited supply can make them a hedge against inflation. And their speedy private transactions can make them appealing to those who value efficiency and privacy. As we can see, the differences between crypto and fiat are not just about real versus virtual. But wait, it's not all black and white. There are some surprising similarities between crypto and fiat currencies. Yes, you heard it right. Despite the stark differences, the two forms of currency share some common ground. First and foremost, both serve as a medium of exchange. Just like you can use your dollars, euros, or yen to buy goods and services, cryptocurrencies like Bitcoin, Ethereum, and others can be used to facilitate transactions, both online and in brick-and-mortar stores. Now let's talk about their role as a unit of account. fiat currencies are used to measure the value or price of goods, services, or assets. Similarly, cryptocurrencies can be used to represent the value of other assets, like in the case of tokenization, where real-world assets are represented digitally on a blockchain. Moreover, both crypto and fiat currencies function as a store of value. Although the volatility of cryptocurrencies may make them seem like a less stable store of value compared to fiat currencies, it's worth noting that many people invest in cryptocurrencies as a hedge against inflation, a problem that plagues traditional fiat currencies. These similarities challenge the traditional view of money. It's not just about physical coins and notes anymore. Cryptocurrencies have expanded the definition of money, showing us that it can also be digital, decentralized, and driven by technology. However, the similarities don't stop there. Both crypto and fiat currencies rely on trust. In the case of fiat, we trust that the government backing the currency won't suddenly collapse. In the case of crypto, we trust in the security of the blockchain technology and the community of miners that validate transactions. And let's not forget the element of supply and demand. The value of both crypto and fiat currencies is heavily influenced by their supply and demand in the market. If demand outstrips supply, the value goes up, and vice versa. So in some ways, crypto is not so different from fiat currency after all. And that's the big lie debunked. The landscape of money is changing, and cryptocurrencies are playing a crucial role in this evolution. So, where does this leave us? Is cryptocurrency the future of money or just a passing fad? Let's dive into the potential futures of cryptocurrency and fiat currency. It's crucial to understand that both have their unique sets of challenges and opportunities. Cryptocurrencies, like Bitcoin and Ethereum, have been touted as the future of money. Their decentralized nature, global accessibility, and potential for high returns attract millions of users worldwide. However, they face challenges such as regulatory uncertainty, scalability issues, and market volatility. But remember, every new technology goes through growing pains. The internet wasn't built in a day, and neither will the crypto economy. On the other hand, fiat currencies like the dollar or euro have been the bedrock of our economies for centuries. They're stable, widely accepted, and regulated. But they're not without their flaws. Inflation, economic crises, and the erosion of purchasing power are all too familiar to many of us. The recent pandemic has further underscored the need for digital and contactless payment solutions, an area where crypto shines. The evolution of money isn't just shaped by technological innovation, it's also influenced by economic forces and societal changes. As our world becomes more digital and interconnected, the demand for fast, secure, and low-cost international transactions is higher than ever. This is an area where cryptocurrencies have a significant edge. However, it's not all doom and gloom for fiat. Central banks worldwide are exploring digital currencies or CBDCs, combining the stability of fiat with the convenience of crypto. This could represent a significant shift in how we think about money, combining the best aspects of both worlds. So, what's the future of money? It's hard to say. But one thing is clear, the world of finance is changing, and we're all part of this exciting journey. Cryptocurrencies and fiat currencies both have their roles to play. It's not a zero-sum game. The future of money may not be a battle between crypto and fiat, but a convergence of the best aspects of both. Well, that wraps it up. So, does people like Warren Buffett actually have it wrong? It is agreed that crypto does not have the foundation like what we had 50 years ago. Remember your dollars saying at the top, silver certificates where it was tied to gold and silver? Nowadays, inflation is so bad and our government simply prints more, devaluing what little cash we actually have. Time to get off my soapbox. So, what is your opinion on this topic? Please leave a comment below, and if you enjoyed this video, please like and subscribe to the channel. It is always appreciated.